Hi, good evening. This is Hassan Dosani here. I hope you guys are doing well today. And if you can hear me and see the screen, please can you type yes? Very good, very good. So still students are joining. So let's give them few more minutes to join. In the meantime, what we can do is we can take advantage and you remember yesterday because of technical issues with the webinar platform, I was not able to take questions properly. So if you want to ask any questions relating to yesterday's session, particularly the finance bit, you can ask now while we are waiting for more students to join. And then later on as well, towards the end of tonight's session, I will try and keep few minutes extra for questions. Are there marks for good formatting or using the right format? Definitely yes. SBL focuses a lot on the look and feel of your script. So good format, good headings, nice paragraphs, they all really count a lot. So if not for profit question comes, then what ratios to be calculated? Very good question. So Samir is asking, if a non-profit organization comes, what ratios to calculate? The same ratios will never change. Don't you think a non-charity, a non-profitable organization, don't they have revenues? Don't they have expenses? Don't they have assets and liabilities? So nothing changes. I'm just picking questions relating to yesterday, okay? Sir, I wanted to know how you decided to write 6 points. So Nadia, yesterday the question was 16 marks, and generally we follow 2 marks per point, right? So we are supposed to write 8 points. However, if you read the requirement carefully, it said that you need to identify the variances and you need to think about the impact and implication and all those things. So I felt that 2 marks was less, so we followed 3 marks. Okay. When will be the recording available? Recording is being shared very next day, so yesterday's lecture is available. It was shared in my WhatsApp global groups. I don't know. I think ACCA also shares on their through email or not, but I don't know. It's on my group definitely. Yes, it's on YouTube as well. You can Google. Ratio analysis question: should we start from anywhere or should we follow a sequence? No, you can't start from anywhere. Can you start from anywhere when you are writing to the board of directors? What kind of a CFO are you if you want to start from anywhere? You always start from revenue and then you go down to expenses and then profits and then the balance sheet and then non-financial ratios. Okay. 4 marks was too high actually. It's very subjective. Voice is cutting again. So I don't know, admin. Some few students are feeling that my voice is cutting. Is my voice correct? Yeah, I think majority are saying the voice is okay. All right. Yes, Kritika, that's a good point. Yes, I think you should follow that. I think you should follow that. I'm not going to talk about it now because it will cause confusion, but yes, do that. All right, so it is now 6 minutes past our time, so we are good to start today's session. Although students are still adding, but we can't wait for them, right? Okay, so welcome to day 3 of our SBL webinar series for September 2021. My name is Hassan Dusani, and what is today's plan? First of all, we will talk about time management, very, very important because one of the most top 3 reasons why students fail SBL is because of bad time management. And then I want to focus today on a topic called risk management. So today, 2/3 of the time, like at least 50% of the time I want to give on risk management. There are two or there are at least 2 topics in your course which is tested in each and every attempt. I repeat, there are 2 topics in your course which are examined in each and every attempt. One is a financial related question. It could be a financial projection or it could be a financial analysis. 100% each and every attempt you will see a question on finance. And the second topic is risk management. So risk management is another topic which has been asked consistently in each and every attempt of SBL. All right. So, and the third topic, which is not very far from risk management, is internal controls. So these 3 topics, each attempt, they are tested. So this time, I just thought that I will focus on finance, which I did yesterday, and I want to focus on risk management because in the previous webinar, I did talk about risk management, but I felt that students were struggling with the entire concept. So this time, today, I thought that I will devote at least 40-50 minutes on risk management, at least so that you can secure one question. All right. So today's game plan is risk management, and we will do 2 questions. Just like yesterday, we did 2 questions on finance. Again, we will do 2 questions on risk management so that you guys can score very high on risk management questions. And then I will talk about internal controls, professional code of ethics, and corporate code of ethics. Professional skills, we will talk about evaluation skill and communication skill. Right. How to ask questions? You can type your question in the question box, but please, your question should be pertaining to the topic under current discussion. I will not entertain any question which is outside the topic under discussion because it will break the tempo. I will give 5-10 minutes in the last for open-ended question answers. Okay. And I do have a SBL WhatsApp group. Both days videos and handouts are available as well as notes are available. If you want to add yourselves to this group, please send a WhatsApp message on this number. This is my coordinator and he will send you the link. Right. So today's exam technique, and before I start today's exam technique, let me go through the question box. Uh, some new topics were added for risk. Absolutely, Priya. I will cover the new topics on day 5. Priya, please don't repeat your questions again and again, right? Yes, yes, I know about the syllabus changes. Leave it with me. I will cover all the syllabus related, uh, new syllabus related changes on day 5. Okay. Please, Sayyada, you're asking a question which is not relevant to the topic under discussion. Technical articles I already discussed on my first day of the webinar, and I will again discuss on the last day. Sayyada is saying majority of my questions go unnoticed. I'm very sorry, Sayyada, but I do select questions because when I feel that the question is not relevant to the topic, or it is a very specific question for one student only, then I do try to avoid it because we have limited airtime and 300 students. So it's not fair with them. You can ask me on the WhatsApp group. All right. There's not a chat option. There is a Q&A option. So either you can drop your question in the WhatsApp group and we'll get a lot of answers. Don't worry. Okay, guys. So let's move on. Um, okay. So today, time management. So we all know that the paper is of 4 hours, out of which the examiner suggests that we allocate 1 hour for reading time and the remaining 3 hours for drafting. Now there is no hard and fast rule. You can start drafting from the very first minute because you have entire 4 hours to yourself, right? So it's just that based on examiner's experience and my experience, the ideal way is a 1 hour reading and planning time and 3 hours of drafting time. Now there are few students who can read fast or who can think fast, or sometimes the case study is small in size, so maybe you can finish the reading within 45 minutes. It is possible if the case is small or you are a fast reader and a fast thinker. So in case you finish reading in 45 minutes, please don't wait for 1 full hour to finish. Just move on towards the drafting. Okay, take a head start in drafting. However, there is another possibility that the case may be a long case study, and people might be slow readers. For example, I am a slow reader because I want to read, I want to think, I want to digest, then move on, then read, think. That I am a slow reader, bottom line. And if the case study is long, I don't think I will be able to complete the entire reading within 60 minutes. How many of you think that you are a slow reader or you take time to read? Give me a yes if you think you are a slow reader and you need time to read and think. I'm a slow reader, to be very honest. I take time to think. So, yes, true. So sometimes, it's difficult English, sometimes it's too much information. So whatever is the reason doesn't matter. If the case is long, definitely slow readers like me will not be able to, finish the entire reading within 60 minutes. Now, what to do if 60 minutes is up and still my case is not complete? What do you suggest? Should I continue reading or should I abandon the reading wherever I was and move towards drafting? So please mention continue reading or drafting. Let me see what you suggest. Okay. So everybody is saying drafting or stop reading. No one is saying continue reading. Ah, there's one person who says continue reading. Kavita says continue reading. Good luck, Kavita. If you want, I think, if you continue reading, if the time is up, Kavita, it is a suicide. You know what is a suicide? You will be bleeding to death. Why? Because if you start hijacking the drafting time, in the end, your drafting time will fall short and you might end up doing incomplete paper, right? So that's a suicide. So the moment 60 minutes is up, you guys should stop and move towards drafting. Now, if we stop reading, then there is another risk that maybe the last exhibit which we were not able to read was a very important exhibit and there were very important piece of information there which I had no clue because I never read it, right? Is this risk there that maybe the last exhibit was the most important one? You think the risk is there? Yes. So now I have come up with a very smart approach. Listen very carefully. So normally there are two types of exhibits. How many types? Two types of exhibit. Okay. The first type is called one is to many exhibit and the second type is called one is to one exhibit. Can anybody make a guess? What is the meaning of one is to one exhibit? This one. Can you make a guess? What do I mean when I say it is a one-to-one exhibit? One-to-one exhibit. Let me see. What is a one-to-one? Please be very, very specific, guys. I don't want stories. Yes, good. One-to-one exhibit simply means that that exhibit pertains to one question only. That means that that exhibit has got very limited information or very specific information, and that specific information can be used in one question only. So it's a one is to one question, one exhibit. Relatively straightforward. Now, can you guess what is the meaning of one is to many exhibit? One is to many. One is to many means, very good, guys. Now you are getting in the mood. Very nice. So one is to many exhibit is an exhibit which has got a variety of information which is expected to be used in more than one question. Right? So it's because the exhibit has got a lot of information, it covers more than one question. So now, what do you think? Which one is more important exhibit? One is to one or one is to many? Yes, one is to many is definitely more or higher important. All the exhibits are important, don't get me wrong. But relatively speaking, one is to many exhibits are more important because if you miss reading one is too many, your multiple questions might get affected, right? Stakes are high. So then which exhibit should you read first? What I'm trying to say is, how can you prioritize or select which exhibits to read first, so that in case your 60 minutes are up, the smaller ones are left. So how can you prioritize? Very good. We will first read. We will first read 1:many exhibit, and then whatever time is left after we are done with 1:many exhibit, we will then read the 1:1 exhibit. So we prioritize. We don't read exhibits in their sequence. We will not read exhibits in their numeric sequence. That's a kiddish approach. When you are up against tough time management, you need to prioritize. Important exhibits you read first, less important exhibits towards the end. So 1:many we will read first, followed by 1:1. Now the $1,000,000 question. How do we know, or how we can distinguish or identify 1:1 versus 1:many? It's not difficult. So there are some typical exhibits like board minutes. Normally a board minute is 1:many, because obviously the board, they discuss about a lot of things, right? The board is responsible for the entire organization. So a board minute by nature has a lot of information. So it is 90% of the time board minutes is 1:many. Annual reports of the company. Again, annual reports by nature, as the name says, talks about, all the entire performance of the company, so that the shareholders and stakeholders see a 360-degree picture. And a website of the company that also has a variety of information, right? So these are the three exhibits which normally are 1:many. And there's one more hint. These exhibits are generally lengthy. Like what is lengthy? Lengthy is subjective, right? So there will be more than one page. So if you are not able to understand, then you can also judge from the size of the exhibit. If it is less than a page, then maybe it's 1:1. Maybe. If it is more than a page, then most likely it's 1:many. Simple. Now the 1:1 are short exhibits. And the typical things is financial projections. So any financials given, any numbers, any exhibit which just talks about, which gives you financial projections or financial numbers, that is supposed to be a 1:1. Any specific information or topic, newspaper articles, these are specific one, and generally their size is shorter. They will be less than one page. Okay, so do you want to try something now? Let's see. I've opened up one paper. It is this one is called BCO. It was sometime in, I think, September 2020 paper, BCO, charitable organization. So exhibits are here. Do you see the exhibits? The first one is obviously very important. It says overview, so you cannot skip that. Overview is the lifeline of the case study. And then, can you guess extracts from BCO's annual report? What do you think? Annual report. Let me open it and let's see how it looks. Our mission, vision, aim, annual report, objective and review. It is a short one. It is not more than a page. It is almost one page, but I think because it says annual report, what do you guys suggest? 1:1 or 1:many? Yeah, I'll take it as 1:many. So I will definitely read this. What about this one? About us page on the website. Website. Let me look at the size and the look and feel. So it tells me about leadership, board of trustees, the size. I'll take it as what? It's a website. What do you say? One is too many. I agree. The third one is BCO's financial activities and KPIs. Financials. Make a guess. Financials. Let's have a look at it. Financials. Ah, this was the one we did yesterday. Eh? Very good. Financials. So it is definitely. Let me look at your comments before I say 1:1. Very good. Very good. You guys are getting better day by day. And charity sector research report. I have no clue, but it is probably an external report or article or some. So I'll judge from the size maybe. I don't know. So if I don't know, I'll take it as one is too many. Doesn't matter. The BCO's risk register. Now, risk register is a very specific topic. It will just tell us about various risks. What do you think about risk register? Very good. 1:1. An article on charity leadership. Again, an article on charity leadership. It's an article. It's one is supposed to be 1:1. It's very specific and the size is not too big. So 1:1. Okay. So I think how many are 1:too many? The second one is 1:too many. Third one is 1:too many. This one is 1:1. This one is 1:too many. So 1 is too many. So when you will start reading, I will first read Exhibit 1, which is the overview. I will then read the annual report. I will then read the website. And I might skip this exhibit. I might read the charity sector research report because I was not sure it was 1:1, 1:too many. Then I will skip the risk register and I will skip the article charity. And by skip, I means that I will read it later if my 60 minutes are available. In case I run out of 60 minutes, I can always read the 1:1 later on when I will actually start the question. Do you understand? It's a very, very important technique. Very, very important technique. How you can prioritize. Yes. So supposing your judgment goes wrong, it was a 1:1 and you said 1 is too many. It doesn't really matter. Or if you have doubt, then treat it as 1 is too many. Okay. It's just for your internal planning, right? The examiner doesn't know about this. Right. So I suggest you do 1 or 2 more papers and try to see whether you can judge, but it is not a difficult thing. Yeah, okay. Now the thing is, once your 60 minutes is up, what do you do then? That's important. We already discussed that. We will stop reading and move to drafting. Please do not eat up the drafting time. Okay, you have to stop and move to drafting. So now we go towards drafting. So we have got 3 hours of drafting available, and 3 hours means 180 minutes, 100 marks paper. So this is the benchmark which you have to follow. You need to follow 1.8 minutes per total mark. Okay, per total mark. Total mark is technical marks plus professional marks. The thing is, if I say it is a 10 marks question, how many minutes should you give? 10 marks question, how many minutes? Very good. 18 minutes, right? Very good. So it's very easy to calculate the time, but it's very difficult to keep track of the time. That is where students, they struggle how to keep track. For example, they wouldn't even know 18 minutes has gone by, and they wouldn't even know because of the stress situation, because they are panicking, or whatever is the reason. The exam situation is very, very stressful. Even a very logical headed person might lose the cool. So how do we keep track of the time? Again, I will give you a very interesting thing. For example, let's say this is a question 12. So this is a question: analyze the financial and non-financial performance. Okay, this is question number 1B, this one. How many marks? It says 13 plus 3, 16 marks, correct? So how many minutes are you supposed to give for 16 marks? Can anybody calculate? This is basically 16 marks multiplied by 1.8. Can anybody let me know? Let me see. How many minutes? 29 minutes. Okay, 28.8 is difficult. 29. Let's say 30 minutes. Okay, 30 minutes for argument's sake. So you will write heading question number 1B, and now be down you will write here the ending time. So the time here is, let's say, 9 p.m. right now. If you watch, if I see my watch, it's 9 p.m. or 9:03. Let's say it's 9:05 p.m. in Pakistan. If you add 30 minutes, it becomes 9:35, right? You just write 9:35 on your answer sheet, make it really big, and then on top of this here, you start drafting your answer. This report, da, 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 so that as you go down, you will never lose sight of 9:35. Nice, na? If you're writing, you're going down, down, down. That is why I deliberately wrote this in the end so that I never lose sight. I could have written it here on top. And then what would have happened when I was going down, 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 down? I will lose sight of the time because it's there up. So always write it on the lower side of your answer so that you don't lose sight. And the moment it's 9:35, you stop the answer, you go down and you say question 2, the next one. Okay, this is a good technique which one or two students shared with me. I hope you will take advantage of this simple technique. It was a good one. You liked it? Try it, huh? You wouldn't know unless you try it. Okay. Now what to do if the time is up? So if, let's say, 30 minutes are up, I will leave few lines and move to the next question. At least if the time is up, at least complete the point which you are drafting. Okay, so it might take 1 or 2 more minutes for you to complete that point or complete that paragraph. But then you just leave some space and move on to the next question. All right. In the end, if you have extra time available. You can always come back and try and complete it, but do not hijack the time in the middle of the paper. You can come back toward in the end. Now this one is important. I can allow you to devote extra 5 minutes. So whatever was the time allocated, you can devote extra 5 minutes in which question, in a question relating to financial analysis or financial projections. Why? Because this is high scoring and it's worth spending 5 minutes extra so that you can score a couple of marks extra. All right. That is why I devoted yesterday's full session to finance, because A, financial question comes in every attempt, and B, it's high scoring. C, you guys are finance students, so your finance should be your strong hand. All right. Now, any questions before I move to risk management? I'm just going through the questions. What if we run out of time and we do not remove the time? Remove the time. I mean, if you run out of time, you're finished. Suicide. Game over. See you next time. That is why you should never run out of time. You have to, sir, when to read the requirements. It's all part of 60 minutes. When to read the requirements, it's all the reading is part of 60 minutes. In the first class, I think I mentioned that you first read the requirements and then the exhibits. And I will talk about it on day 5 as well. Don't worry. That's one. Okay. While reading, sir, can we take out points and paste into Word? Of course. It is the first 60 minutes is called reading and planning time. So in the while you are reading and you saw an important point, you just copy paste it as and when you are reading it, because later on you will not get the time. Yes, you should start copy pasting in the first hour. Very good. Do you recommend spotting keywords in the questions? Yes, whatever works with you. You can spot keywords. You can try to spot stress words like significant, extremely, notably. So I think in the first class I demonstrated that when you open a paper, first you will make a list of requirements so that while you are reading the exhibits, you can frequently look at the list of requirements and then you can copy paste at the same time. Copy pasting will actually start, you will actually start developing your answers while reading. All right, good questions, I enjoyed. Okay, now talk about risk management. I personally feel that finance students do not have the mindset for this topic. Okay, you guys are so much in accountants, you are being programmed as accountants, that you fail to see the big picture. But I will try my best to brainwash you guys and make you start thinking like a CFO or a business person. Okay, so just get out of the accountant's mindset for this particular topic, risk management. First of all, what is the meaning of the word risk? So a risk is any future incident. It's a future incident which can cause damage or harm to the organization. So A, it's a future incident which will cause damage or harm. Okay, so risk is generally used, the word risk is generally used for things which can cause harm. We don't use the word risk for good things. For example, there is a risk, there's a high risk of passing SBL. True or false? There's a high risk of passing SBL. So what's the risk? There's a risk of failing SBL. Nobody is saying there's a risk of passing SBL, because the word risk means something bad in the sense that it will cause you damage, right? What is the meaning of risk management? You can guess, right? A risk management means all the activities which the organization undertakes to avoid or reduce the chances of risk happening. So again, coming back to our SBL example, there's a risk of failing, right? So are you guys doing any planning? Have you thought that how you will not fail and you will pass? So attending this webinar and then reading the notes and then doing practices and then doing mocks, what are these things? These things you are doing now so that you can avoid or mitigate the risk of failing SBL. So all these activities are called risk management activities. Okay, very, very simple concept. Any questions so far? Say no. Okay, very simple. All right, I'll try my best to make this very, very simple and basic for you. So please help me and do not complicate things, because by now you must know that I hate complicated stuff. Now, there are several types of questions which the examiner may ask. There are at least 2 or 3 types of questions on risk management. The most common type of question is that he says identify the key risks or the major risks or risk. So this is a very common question on this topic. Identify the major risks being faced by A, B, C company, right? So you will need to identify the risks. For that, you will need to remember this list. So there are several types of list, and I will increase the visibility for you. Yeah, that's better. Very good. So you need to understand what these terminologies means, okay? And these are specific words which are used in the world of risk management. So the first word I want to tell you is business risks or strategic risks. Can you guys make a guess what is the meaning of business risk or strategic risk? And you can guess very easily. Okay, let me do one and then you can try on your. A business risk means that the business is at risk. Does it make sense? A business risk means that the entire business is at risk. And what do I mean when I say the entire business is at risk? Hmm? Let me see. Business risk. Achieving the objective of the business, risk that arises, closure of business, going concern. Excellent comments, guys. Very good. So basically, a business risk means that the entire business is at risk, and the worst possible scenario would be going concern. Let me write all this in a nice way so that um, you can. This one means so the entire business might collapse. It is a very, very high. So business risk is something which nobody wants. Okay, because if this happens, the business will no more be there. So if what about strategic risk? Can you guess? A strategic risk means that your strategies are not working. I mean, what can go wrong in strategies? They are not working. So if your strategies are wrong, you made some wrong decisions, or the strategies are not bringing the desired results, it's not growing the business. In fact, the business is now making losses. That means your strategies were stupid. So a strategic risk means the risk that your strategies might go wrong. A business risk means the risk that the entire business may collapse. So what I'm trying to do is I'm trying to teach you how you can guess from the words what it means, because it's not uh, easy for everyone to remember the definitions or the meaning of so many risks, right? A business risk is a risk that the business might no more be there. A strategic risk is a risk that the strategies might go wrong. Okay. Now, let's skip financial risk. Let's talk about liquidity risk. I'm sure most of you knows what is the meaning of liquidity risk. Can you tell me the meaning of liquidity risk? Liquidity risk means, yes, cash flow issues, cash shortages. Your current assets are not sufficient to pay off your current liabilities. Very good. Basically, cash flows. Okay, very nice. So a liquidity risk means that the business is having difficulties in making payments, cash flow issues. Your current assets are not sufficient to pay off your. So you think, why do we say liquidity risk as a risk? Is it a risk? Is it bad? Of course. If the business is not having money to pay the bills, the salaries, it will collapse, right? And it's just a matter of time. So liquidity risk is a cash crunch, cash flow issues. Credit risk, it is generally from customers not paying. So if I am giving credit to my customers and that sexy lady took credit and went away, that's credit risk, right? Hmm. You think credit risk may lead to liquidity risk? What do you think? Credit risk may lead to liquidity risk at some point in time. If most of my customers default, what will happen? It will ultimately may put me into a cash crunch situation. And now listen very carefully. Now listen very carefully. A credit risk may lead to a liquidity risk. If we don't address the credit risk soon enough, it may convert into a cash flow crisis. And a liquidity risk might convert itself into a financial risk. Financial risk means that overall our financial strength, our P&L and balance sheet, our profitability, they're all going down. And if we don't take care of financial risk in a timely manner, it will ultimately result in a going concern. Did you see how the magnitude is increasing? A small credit risk, if it is not controlled, it will get bigger. When it gets bigger, it will start a liquidity crisis for me. If we don't control that, and it gets bigger, it will convert into a financial risk, because now every company is struggling financially, and if we don't address the financial risk quickly, ultimately the company will collapse or the business will collapse. Nice, huh? Any questions, please? Peer Hamza is saying, what is the difference between liquidity risk and financial risk? There is a big difference. Look at the words. This one is focusing on cash flow. If you have a cash issue, it's liquidity risk. But when your company is making continuous losses, the profits, the revenues, let me rewrite. So financial risk is something where the revenues are constantly declining, profits are declining. Okay. Liquidity is cash flow issues. Now, tell me, credit risk is there, right? We all know that the risk that if we give credit to a customer, there is a chance that those people might not pay us. How can I avoid credit risk? Can any intelligent person tell me? So there are basically two things I can do. Either I can try and avoid the credit risk altogether, and if avoidance is not possible, then I will try and mitigate or reduce the risk. So first tell me, how can I avoid the credit risk? Tighter credit control is not avoidance. Cash, that's good. That's good. If you want to avoid credit risk, then stop giving credit. Khalas. How can you give credit and on the same time avoid credit risk? If you guys give credit, there will be credit risk. It's not avoidance. Avoidance is only possible if you don't do credits. Can you just deal with cash or credit card? Like this online business. Online business, they charge your card and then they deliver, right? It's pure 100% cash, zero credit risk. You think ACCA has credit risk? No, right? Because they take money from you in advance. They don't have any credit risk. But supposing sometimes you have to give credit, the nature of business is something, so then you need to mitigate the risk. How you can mitigate the credit risk? By tighter credit controls. Then you must first analyze the customer, whether they will pay. You decide some credit limits, then you just follow up on time, send reminders, this that all this is all collectively known as credit management. Liquidity risk means cash flow issues. How can you mitigate that? By strong cash flow planning. So, in my company, I do cash flow projections every month for the next 12 months. So I project my cash flow status for the next rolling 12 months. So what will be my collections each month? What will be my payouts? Is there any month in any month in where I face a cash flow crisis? So a lot of planning needs to be done on cash flow projections. Financial risk, how you can mitigate that, the risk of revenues. So you make sure that your marketing strategies, your revenues are growing. Make sure that you remain profitable. All those strategies to increase revenues, to reduce cost, to increase profit should be working. Otherwise, your business or strategic risk will get invoked. Do you have any questions? I'm going very slow so that you understand the philosophy of risk management. Okay, now let's move on. Now there is a various type of risk. Foreign exchange risk. What is foreign exchange risk? So supposing if you have a overseas customer, or if you have overseas suppliers, your suppliers are located in China or some low cost country. You are importing stuff or buying stuff from overseas suppliers, or you are selling stuff to overseas customers, then you are dealing in foreign exchange, right? And any adverse movement in that currency may cause a problem for you. So if you have assets and liabilities in foreign currencies, adverse movements in foreign exchange will affect you. Correct? How you can mitigate foreign exchange risk? Can anybody guide me? CFOs? Hedging, very good. I like hedging. Forward contracts, very good. Hedging, forward contracts, not leading and lagging. Derivatives contract, futures, swaps. Wow, this is technical, man. Anyways, options. Okay. This is all beyond my small mind. Okay. So basically, just remember a couple of things. Foreign exchange risk can be reduced by forward contracts, hedging, future contracts on exchange rates, etc., derivatives, whatever. Just two or three sexy words, and that's enough. Interest rate risk means that any interest rate movements can adversely affect you. So if you have invested some money and earning interest, or you have borrowed some money and paying interest, if the rates move and it adversely affects you, it's interest rate risk. Any idea how you can mitigate interest rate risk? I have no idea actually. Fixed rates or swaps, very good. Just remember, swaps or fixed rate, that you agree the interest rate for next 2 years, 3 years. Hedging, swap, these are the buzzwords. Okay, don't ask me what it means, but just write these words: hedging, swaps. Okay, we did this. Market risk, and the next one is market share risk. These two: market risk and market share risk. So there's a very big difference between the two, and students, they normally make mistake here. That is why I wrote them together. One is market risk and one is market share risk. Market risk basically means share prices. So if the company is listed and the share prices of that company moves adversely, it moves and it adversely affects the market, the valuation of the company and the variances and PE ratio and all those things. That's market risk. Market risk is to do with share prices. Any adverse movement, sudden drop in share prices, that's market risk. And market share risk or competitive risk is basically the risk of competition. If more and more companies, competitors are coming, that means that market share or competitive risk is on the rise. Okay. Now, political risk. Political risk is to do with governments, government policies, political stability, all those things. Now, how can you mitigate political risk? Any idea? If the government in my country is crazy, what do I do? Uh, what's happening? Just give me a second. Yeah, it's there. Just to escape from the country. Yeah, why not? Ah, good options. Diversify into other countries. Very good. Don't put all eggs in one basket. Avoid long-term planning. Excellent. So I'm just reading your comments. Very good. Very good. Some of you are really smart. What is legal and compliance risk? What is the meaning of legal and compliance risk? It is to do with laws. So you just remember the key words. So legal and compliance risk means it is to do with laws and regulations. So if it's a regulated industry, you have to follow so many laws, then there's a legal and compliance risk, which means that there is a risk that you might miss out complying with certain laws and you will be given a penalty or something like that. Okay. So these days there's a lot of stuff happening in the, this um, personal data privacy thing, all this Google, Facebook selling of personal data. Amazon was fined like 800 million or 800 billion dollars last month by Europe because it violated the European Union data protection regulations. So all this is legal and compliance risk. Environmental risk, any idea? This is to do with earth, pollution, carbon. So all these oil and gas manufacturers or heavy duty people who are causing damage to the earth, they face environmental risks because they are damaging the pollution, the earth's ecological system. Reputation risk. Yes, some bad news, which can anything which can adversely affect the reputation of the company. Very, very big. So if an employee dies of accident on my premises and it was found out that I did not provide that employee with sufficient safety tools, it will definitely lead to a legal risk, a reputation risk, a share prices risk like market share. Health and safety is a risk that, health and safety accidents related to health and safety happens. It could, a customer can die, a supplier can die because of my product or my premises, employee can get permanently injured. All these are health and safety risk. Technology risk. Means that, in today's day and time, all businesses are highly dependent on technology. So technology risk is there. For example, if the right now the if the internet stops working, what happens? Like yesterday, it was a screwed up day because it's too bad. The risk was there. Operational risk means the day-to-day operations of the company, the purchasing, the inventory stocks, the manufacturing, all those things are operational risk. Anything which goes bad in your operational processes, that can increase your operational risk. Intellectual risk, this is interesting. So intellectual risk is your key staff, your key people or your very senior people, they leave the company. For example, the research, the innovation guys, they leave the company. So the company's intellectual property, the intangible, they are at stake. And one more I just remembered, probability risk. You know what is a probability risk? The probability risk means dishonesty by employees. Okay, dishonesty or fraud by employees, like our employees demanding a bribe, or he's taking some kickback to approve the tender. That's a probability risk. So, and there are a lot more risks or terminologies out there in the world. There is no hard and fast list. I just tried to compile some basic list of the most common words in the risk management which you should be aware of. Okay. Any questions so far before I tell you something important? How to minimize market risk and market share risk? You tell me. Is disruptive technology a technology risk? Of course. How can you reduce market share risk? How can you reduce market share risk? By being innovative, by good marketing, good products, good customer service. Very good. So simple, right? Just turn it the other way around. All right. So now, why did I tell you this list? The question is, why did I tell you this list? Because, wait, because when the question says identify the key risks being faced by ABC company, you will need to name you will need to pick up by name this one. You have to mention the name of the risk in your answer. So if the company is struggling with cash, it has very little cash left, which risk is this? If the company is struggling with cash flows and it has very little cash left, which type of risk is this? I'm testing your knowledge now. Again, this is hanging. Wait a second. Yes, now it's working. Liquidity risk. Excellent. Very good. So if the company is purchasing most of its raw materials from overseas suppliers, what is the risk here? If the company is purchasing its raw materials from overseas suppliers, what is the risk here? Oh God, it's again hanging. Let me call this guy. Yes, foreign exchange risk. That's one aspect. How about operational risk? यार, it can also be operational risk. In what sense? When I say that maybe, when we are purchasing raw materials from overseas suppliers, it may create an operational risk as well. So what do I mean when I say it may create operational risk? Yes. No business. Now, who said business risk? My God. God. Yes, correct. So supposing something bad happens in that country, or is the or the transportation, or something happens, procurement, so there's high dependency on overseas supplies, is not good, right? Very good. Very good. Okay, 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 okay. What about the company is continuously losing revenues and profitability? What do you think? Very good. Very good. There is a major leakage in one of the company's pipelines, which is causing damage to the oceans. Environmental, very good. And then it can also lead to, so you see, one risk may lead to another risk, and then another risk. They're all kind of linked. So environmental risk may lead to reputational risk. It may lead to legal and compliance risk, and it may also lead to financial risk, and if it is a worst case scenario, a business risk. So let's talk about COVID. What do you think? COVID is which kind? What did it do? The business risk. Yes. So it started with credit risk, so that most of my customers were not able to pay me because they were in deep shit. And because I was not paid, I went into a liquidity risk. And then my customers, because of lockdown and all those things, they stopped buying my products. So my revenue went zero. My shops got closed. Financial risk. And very soon, after 2 or 3 months, I was able to survive on my reserves. But after that, it was business risk and then going concern. Very good. Ultimately, it was business risk, right? A lot of huge multinationals like Avis Rent-A-Car and hotel industry, large hotels, construction companies, they all went bust. They all went into administration. Very good, very good. So are you guys clear with the types of risk? Why I gave so much time in this? Because in your risk management question, you have to name the risk. If you don't name the risk, you will not get marks. Okay, the most common mistake students do in this question, they don't use these words in the risks. They just talk about the weaknesses, or this is not right, this is wrong. But Baba, you need to use these specific names, risks, in your answer, otherwise you will not get marks. And if the question says give recommendation, then you should be able to give recommendation as well. Now, now the heavy duty stuff is over. So risk varies from company to company, and it can also vary from industry to industry. So you think all companies face the same level of risk? No. It depends on the size of the company, the geographical location of the company, the growth phase of the company, the business model like physical, online, the finance, so many things. So risk varies from company to company. A small teaching institute versus a Kaplan teaching institute, both their risk profiles might be different because of the size, the location, the maturity of the business. Similarly, risk varies from industry to industry. All industries, they don't face the same risks. Like a banking sector, therefore them the credit risk is too high because they give loans and advances. But oil and gas company, for them there is very less credit risk. For them, that's health and safety risk. For them, it may be environmental, ecological risks, right? So it depends on the nature of the products, the level of investments, the level of regulations, the level of technology, ecological aspects. Very basic question. Now, risk diversification, it is another word which I want you to be familiar with. So one of the most common way to manage risk is called diversification. You know, it's this, as the saying goes, do not put all balls in one basket, right? Is it balls? No, 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 it's something else. Do not put all eggs. Yeah, sorry guys. Do not put all eggs in one basket. Why? Because if the basket falls, all the eggs will break. So diversification is one of the basic techniques of risk management. Now, whenever we talk about the word diversification, a business can diversify at three levels. First of all, a business, when they think about diversification, the first level of diversification is product diversification. So if right now if I am teaching SBL, so the first thing is I should teach more subjects. I should add more products under my cap, so that if something goes wrong with the first product, you have got the second product to cover up. So product diversification. The next level of diversification would be industry diversification, that now it's time to, if I already teach like 3-4 subjects in ACCA, suppose what happens if something goes wrong with ACCA? I'm screwed, right? Then I should think of industry diversification, that I might start teaching some how to fly an aeroplane, or I can start teaching engineers. I'm joking. I can start teaching MBAs or some other certifications like SIMA, or I can start teaching in a university. That's industry diversification. And also I can think of geographical diversification, that if the company is focusing in one part of the world like India or Pakistan or Sri Lanka, they should now diversify into other countries like globalization. So just whenever you see the word diversification in any of your question in the exam, you just talk about diversification, product diversification, industry diversification, and geographical diversification. Now this one is very important, because why it's important? because in the exam, the next type of most common question is the risk management process. So the first type of question was the this one types of risk. Identify the major risk. That's the first type of question which the examiner asks. And then second type of question is the risk management process. So we all know that risks may cause damage, right? And we all know that organizations, they need to do something to protect themselves from the risks. Correct? But what exactly can they do? What is the risk management process? Are there certain steps or not? So if tomorrow some director asks me, Mr. CFO, I think we should implement like a proper risk management process. Can you please tell us what are the steps involved for risk management process? So I will give him this list. This is a very, very important list, and I want you to memorize this list. First of all, if we want a strong, effective risk management process within the company, the first condition is commitment from top management, which is the board. That's the first requirement. Nothing can be implemented until and unless the top management is serious about it. So the first condition is that there has to be a strong commitment from the board. And how does a board they can demonstrate that they are serious about risk management? They will create a formal risk committee at the board level. So we will study about committees maybe tomorrow. So at the board level, they have subcommittees like audit committee and nomination committee, remuneration committee, and the fourth most common committee is risk committee. So if the board is serious, then that organization must have a proper risk committee at a board level. Okay. In fact, for listed organizations, it is mandatory to have audit and risk committees. And then there's a risk assessment process. Then you need to assess the risk. Now, how can I protect myself if I don't know the risk? It's not possible, right? So if I want to protect myself, I need to know what kind of risks I am facing. Then only I can plan, right? So the first step is, let me change the nice color. Which color do you guys want? Let's take this one. Make this one. We will first make a list of risk which organization faces. Okay. We will make a list of all the risk which we face, and then we will analyze the impact and likelihood of each of the risks. So maybe I come up with 100, maybe I come up with 100 plus risks. It's a long list. So I will need to prioritize how. So I will analyze the impact of the risk, that risk versus the likelihood of the risk. Based on this, I will prioritize the risk. I will see that, okay, there are 100 risks, but is all of them deadly? No. Some of them will be very high, some of them will be high, some of them will be medium, some of them will be low risks. So I need to analyze each one of them based on impact and likelihood, and then prioritize their risks. Once I have prioritized my risks, then I will plan mitigation actions. And okay, this one is the biggest risk. What do I do? So based on priority, I will start from those risks which are the biggest, and then one by one go down the list. Okay, and then there's a concept of a risk register. Can anybody tell me what a risk register is? Risk register. Now guess from the name. Risk register. List of risks. Very good, Manur. This is exactly I like. You start guessing very simple stuff. Perfect. So it is a risk register is a formal document in which we note down or we capture all the risk which we face. And then we will, in the last, we will regular monitoring of the risks. Why do we need to regularly monitor our risks? Any idea? We just do it once and forget about 3 years, and then we will revisit after 3 years. Why do we need to regularly monitor the risks? Because the risks are dynamic. Not dinosaur. The risks are dynamic in nature. It's evolving. It's constantly, the world is changing. Competition is changing. Customer trend is changing. Political scenarios are changing. You never know what can happen when. Something which looked small today might suddenly become a big risk tomorrow. So it is always highly stressed that risks is not a one-off activity. Organization should regularly update its risk register, see what's happening, all those things. Any questions with this one? Risk assessment process, very important. And then of course, there will be staff training involved, and we can appoint a proper risk manager. And for large companies, they can afford to have a full-time employee called a risk manager. For larger complex companies, they have risk audits. So essentially, this is entirely the risk management process. Very important. Any questions? Internal control systems, yes, absolutely. You need to put in controls. What is heat map? It is just a heat map is a diagrammatic presentation in which you just map all the risks. For example, I'll show you control T. So I'll make a heat map, a quick heat map. If I remember correctly, it's a box like this, like this. Okay, so low, medium, high, low, medium, high, and I think, I don't remember, I think here it is probability. It doesn't really matter, probability, and here it's impact. So what is this box? This box is high probability here and high impact. This one is very high risk because the probability is also high, the impact is also high, and then these ones are called high risks, and then these boxes are called medium risk, and then low, and then very low. So you plot all your risks on this matrix based on probability and impact, and then those risks which are falling in this box, you need to fix them first. After that, those risks which are falling in these two boxes, you need to fix them after that. After that, those risks which are falling in these three medium boxes, you address them. Maybe you can decide nothing to do about these risks. So basically, a heat map just helps you prioritize based on probability and impact. It is a diagrammatic or a visual presentation. Okay. Oh man, I am so tired already today. You are making me talk so much and you guys are not talking. How did risk management question asked in exam? We will do two questions, and there are two types of questions generally asked. One is it can ask you to identify key risks, and the other type of question is, it can ask you to suggest risk management process. We will take a break once you guys pass SBL. Okay, you will break when we pass SBL. Yes, Ritika. Okay, just like I want to finish the theory bit and then I'll give you a break. What time is it? We started at 8:30, 9:30, around 10. So it's time for a break. Just give me 5-10 minutes. Okay. What's a risk register? We already discussed about the risk register, that a risk register is a formal document in an organization in which we record or note down all the risk which we face. What are the priority risks? What are the actions we gonna take? Who's responsible? It is a comprehensive control document. So if someone wants to audit the risk management activities, or if someone wants to see whether the organization is doing proper risk management activities, the first document I would ask for is show me guys the risk register. So when I was the auditor, I used to go to the companies and I used to talk to the guys and to the CEO, and he used to ask, Mr. CEO, can I please have the risk register? If they have a risk register which has got all the information, it is regularly updated automatically, it means that they have a process. So what are the contents of a risk register? How does a risk register looks like? Any idea? So I have made this small table. There could be many format, but generally it looks like this. This one is a risk register. So obviously there will be a column for risks, that what are the risks. So for example, if we have 100 risks, there will be 100 items here. What is the impact of the risk? High impact, medium impact, low impact. You can also give a monetary, not a monetary, maybe a numeric score. 1 is low, 5 is high, whatever. What is the likelihood? And then based on that, we have to prioritize the risk. High risk, low risk, medium risk, very high risk. After that, the all the mitigation actions which are taken should be mentioned. Owner, which person who is responsible for the risk. For example, credit risk. Who's the owner? Who should be the owner within the organization? Credit risk, not the credit manager. Go more senior, not At a director level, at a board level, who should be the owner of credit risk? Finance director. Very good. CFO. Very nice. Who should be the owner of business risk or strategic risk? CEO. Very good. Very good. Who should be the owner of intellectual risk or probity risks? HR director. Very good, because no, Baba, don't say board. I need a name. Don't give these general answers like board should be that responsible. To hell with the board. There's no such thing as a board. You need to have a person. HR director. Very good, because probity risk and intellectual risk are to do with key employees. Very good. Who should be responsible for operational risks? COO or operations director. Very good. So now you understand. So the owner means that who will be the right person who will be held responsible if something gets wrong. And the last thing is next review. That when this item will be reviewed again, 1 month time, 3 month time, 1 year time, depending on the risk, right? So we have to specify our rights. We are there now. Advantages of a risk committee. So you remember that board must have a risk committee. So why do we need a risk committee? What are the advantages of having a separate risk committee? Very, very simple. The risk committee will be more focused and specialized. Obviously, it's a committee specifically set up for risk management. So they will be able to, be more focused and more specialized on risk matters. They will be able to spend more time because, the full board has limited time. But a committee can meet more often. The full board can focus on strategic matters rather than getting stuck in risk management stuff all the time. Higher involvement of NEDs because the risk committee majority members are non-executive directors. Higher shareholder confidence. But the first three are important. Four line of defense is the new topic which was included under risk management. In your new syllabus change, I will cover it on day 5 because I am tired today. Use tabular format for question or risk management. So if the question says identify major risks and give recommendation, I would prefer a tabular format so that the examiner can see the risk and the recommendation right across. And we can assume 4 marks for 1 point. I mean, 1 risk and 1 recommendation is equal to 4 marks. Any questions? So we can take a break now. Very good. I mean, just give me a second. It is, I believe it's again hanging. It's hanging, so let it come down. Yeah, I got it. Would we be asked to draw a risk register? Not really. You might be given a risk register to comment whether it's adequate or not. Sir, the third advantage, how come this is risk committee advantage? The third advantage, what is the third advantage? Board can, I mean, if you have a risk committee, all the risk related matters will be taken care of by the committee so that the board, it will free up the board's time so that they can spend more on business strategies, right? Overall, the advantage is to the organization. Sayada, I just answered your question. Why do you keep asking the same question again? Or maybe is something wrong with the question box, so I have no idea. Sayada, yes, you are asking the question again and again and again and again, and you're again flooding my question box. Please. Okay, guys. So let's take a break here, a well-deserved break. And it is like 10 p.m. here. So it will be 10:25 p.m. Okay, be here sharp 10:25. Hi guys, are you back? Are you ready? Are you fresh? You've got some power to continue now? Wait a second. Yeah, no, I just don't forget about you. I just got a call from my office. Sorry for that. I'm just looking at the chat box. All right, so we've got approximately 1 hour. To professional marks or professional skills, today we're going to talk about evaluation skill and communication skill. Both of them are pretty straightforward and easy to earn. Evaluations, when the question says demonstrate evaluation skill, all you need to do is mention both pros and cons of the scenario. So you see, when the board wants to take a decision, they want to look at the complete picture, right? They want a complete picture so that they can take the right decision. So that is why evaluation skill means that whatever we will analyze or evaluate, we will give all the pros and the cons. We will not just be biased. We will not just talk about the advantages and keep quiet about the disadvantages. So if you want to earn evaluation skills marks, make sure that in your answer you talk about both the pros and the cons. However, it is not necessary that it would be half pros and half cons. That's kiddish. It cannot be half pros and half cons. So when I say you need to cover both pros and cons, it doesn't have to be half and half. It's not a pizza. It could, if for example there are 7 points, maybe 5 advantages and 2 disadvantages. That's perfectly fine. It all depends on the availability of information in the case scenario, right? But just make sure that you cover the pros as well as the cons. Okay, any questions on evaluation skill? Okay, sir, ERM is also risk management. ERM stands for Enterprise Risk Management, and yes, ERM is also a risk management framework which is commonly being used. What is the difference between analysis and evaluation skills? Venkat, did you agree? Did you listen to the analysis skill yesterday? Again, Rohan is saying how many pros and cons? Rohan, what kind of question is this? Please, I just said that it has to be a balanced review. It all depends on the availability of information. It cannot be equal. Where were you? My God. Okay, the difference between analysis skills and evaluation skills. Analysis skills is basically when you investigate and find out the reasons for variances. How can you forget this thing in 24 hours? And evaluation skills is not investigation. It is about a proposal in which you have to talk about, you need to cover both pros and cons so that the board can make a balanced or an informed decision. Okay. Again, this question box is stuck. I'm just trying to update my question box. So bad. All right. The next one is communication skill. Again, communication skill simply means two things. It includes two things. Number one, the way you are drafting, the tone of your answer. You need to keep the reader or the addressee in mind when you are drafting your answer, right? So as long as you adopt a reasonable tone, a professional tone, not too strict, not too friendly, just explaining your thoughts in plain English, that's sufficient. You should not be harsh or rude. Just be normal in a professional language, and that's enough. The second thing about communication skills is the formats. So all the formats which you are supposed to make, if you make them nicely, properly, professionally, the report format, the briefing note, the presentation slides, all across the paper. So that is then considered under the communication skill. Okay. Now let's start with a question on risk management. This is March June 2019 called Smartware. We will be opening the CBE platform, practice exam number 3, read overview and exhibit 3 only. Let me go to the practice paper. This question is BCO. I need to look for smartware. Smartware was practice exam 3 resume. Which question was this? This was question number 1A. Let me open question number 1A. Oh, no, sorry, it was question number 1. Oh, it's 1B, guys, sorry. It's 1B, okay. Assess the major risks presented by Smartware's current business model and suggest appropriate mitigation actions to manage these risks. Assess the major risks and suggest appropriate mitigation actions to manage this risk. Is this clear? So let me open the Word document. The format required is a briefing paper, but I'm not. Shall I make a briefing paper or you guys are okay now? Okay, no need to make a briefing paper. All right, because we have done that so many times. So I'll just remove all this. The first thing, how many marks is this question? It is 10. And then professional skills marks are available for evaluation skills by assessing the identified risk at Smartware, 4 marks. 10 marks plus 4 marks. How many marks? It is 14 marks. And how many points should we write for 14 marks in this question? Do you remember yesterday's technique? 7 points. Someone is saying 14 points. Very good. I'm so impressed. Crazy. Okay, good. Again hanging. Sorry, guys. I'm just calling this IT guy. Okay. So for 14 marks, you remember yesterday's technique that normally 1 point carries 2 marks. But if the question says identify weakness and give recommendation, or it says identify risk and give recommendation, then we divide by 4 marks, right? So we are supposed to give 14 divided by 4. How many points? I think 4 risks plus reckons. You need to give 4 risks. 4 fours are 16. Yeah, 4 is fine. Upward round off. So we need to talk about 4 risks. Second thing I said that whenever a question comes on risk management, we try to use a tabular format. So I will just, give a heading, a broad heading. Okay, I will do this. I will select. I will center. And then I will insert a table. I just need a table with 2 columns and 5, 6 rows. Done. Here I will say major risks, and here I will say mitigation actions. I can bold them and center them. Now, this my format is ready. I will close this. I will close this, and let's open the exhibit. So now, because of lack of time, we will not be reading the entire thing. So I know I will point out some paragraphs to you, and then let's see whether you can read it and let me know what kind of risk is there. What about this one? It is the business model. It sources its products directly from suppliers in low cost economy. So it's a company Smartwear, which is basically a clothes retailer. Smartwear is a clothing retailer, and it says that it sources its products. I mean, sources means it purchases its products directly from suppliers in low cost economy. So Smartwear is based in Europe and it is buying its garments from suppliers based in low cost economies. Can anybody tell me, is this a risk from a risk point of view? What's the risk here? Please tell me the name of the risk. Right, please tell me the name of the risk. Very good. Wait, I'm just trying to get rid of, close the question box. Why it's not closing? I'm just calling this IT guy because I'm sick and tired of all these stupid technical things. क्या ये बार बार हैंग हो रहा है क्वेश्चन बॉक्स? मेरे पास हो रहा है ना, वो आपके पास सही चल रहा है तो मुझसे फर्क नहीं पड़ता ना, वेबिनार मैं चला रहा हूँ, वो इशू आ रहा है. आप एक काम करिए कि आप कैन यू डिलीट ऑल द क्वेश्चंस ताकि क्वेश्चन बॉक्स थोड़ा हल्का हो जाए. हैव अ लुक एट इट कि कोई बल्क ऑप्शन है डिलीट करने का, तो डिलीट ऑल द क्वेश्चंस और रिफ्रेश द क्वेश्चन प्लीज. थैंक्स. थैंक्स. So can I copy this? And I can go to my word processor. Word processor, I will copy this point here. Now it says sources is products directly. So what's the risk here? What's the name of the company? Smartware sources its products directly from suppliers in low cost economies. Now where you need to add your comments and say why did you bring this point here? This shows that smartware is highly dependent on what? Overseas suppliers. How is this a risk? This can pose two kind of risks. One would be foreign exchange risk, whereby any adverse movements, any adverse changes in the currency rates can affect smartware. Secondly, in case of any issues in supplier's country, we will not be, it may affect our operations. Correct? So I told about the impact. These are the impact. Hence operational risk. And what is the recommendation? Okay, I'm just putting all the sexy word derivatives, swap techniques for operational risk. Smartware should identify some suppliers near in its own country as backup, correct? In case there is some issues with overseas suppliers. That's it. What is the name? I want to give a heading. I will say Forex risk slash operational risk. I will bold it so that the examiner can see I've identified a proper risk. Very nice. Any questions on, do you get an idea how you will draft it? Let me refresh the question box. Good. I'm just going through some comments. Very nice. All right, let's look at some more. I will close the word processor, and I think it was in transcript to the board meeting. What about this? The finance director is saying it is true that our current financial statements do not present the company in a particularly strong position. Oh, so weak financial position. Profit levels have fallen primarily because our sales has dropped significantly. Whoa, so which risk is this? Falling revenue, falling profit, weakening financial position. Guys, tell me which risk, and there is no room for error. Otherwise, I will shoot all of you. Financial risk. Excellent. Excellent. Very good. It's a financial risk. So I will not draft it. Okay. Drafting would be like this, but what heading you will give here? Financial risk. Give a heading financial risk. And first of all, you will bring some facts from the case, why you are seeing its financial risk. I will just say that current financial position over the last year. Control C, and the Word document here I will paste Control V. So there's a pasting issue. I knew that. So current financial statements do not present the company in, okay, we can say that we can just type the company's financial position is not strong due to significant fall in revenues and profit. So what risk is there? Why we are saying it's a risk? What can go wrong? We will see. What's the impact if this continues? It will soon cause uh, heavy losses, and smartware may not be able to continue business in a financially sustainable manner, and eventually may face a growing concern issue. That's it. I just explained the risk and the impact. What do you recommend? How do you mitigate financial risk? That we will. I would say that smartware should urgently focus on, or the smartware should urgently review its current strategies and make sure that revenues are increased and the company is back into profitability by implementing more effective business strategies so that the financial risk can be mitigated. Very simple. No long stories, no complicated answers. What is the solution to financial risks? If your revenues and profits are going down, you just say revise your business strategies to focus in order to increase your revenues. We try to control our costs and hence our profitability should be back if we want to mitigate financial risk. Easy. Let me go through questions. Very good, very good. Shouldn't we link the risk to the specific business model? I mean, if you are linking, like, it's not like, I mean, if you explain the impact on the business, if you explain the impact of the risk on the business, you are directly, indirectly linking with the business model, this and that, right? Because if you start trying to link with business model, strategies, mission, you will get stuck in your own trap. So just make sure that when you identify the risk, you better talk about the impact on the business. When you talk about the impact on the business, you are actually linking the risk with the business model and the business structure. Okay. Munib, I don't know, but that's a very subjective point, so I'd like to avoid subjective points. Okay, let's look for some more interesting. I have got straightforward points. So now I will just discuss verbally. The shareholders have seen a significant fall in share prices. Which risk is this? A significant fall in the share prices and are concerned whether there would be any dividend. Very good. Market share risks. Markets, not, sorry. Not market share risk. This is market risk. Market risk means that your share prices suddenly drops, and that the valuation goes, and a lot of things happens, bad things happen if your share prices starts going down, right? It shows that the value of company is going down and ultimately company may wind down. And how you can mitigate the risk? By making sure that because they were dissatisfied with the level of returns currently getting. So that means that the company has to earn profits in order to give dividends. So again, we would say that in order to mitigate the market risk, the company should be profitable. They need to come up with strategies to improve their profits and give regular healthy dividends so that the market risk can be mitigated. What about this? The institutional investor suggested to me that the strategic direction of the company is completely wrong. Wow, they're saying the strategic direction of the company is completely wrong. Which risk is this? What name would you give to it? Strategic direction is completely wrong. Very good. Either you can say it's a business risk or you can say It is a strategic risk. A strategic risk is the risk that your strategies can go wrong. So what will be the impact? The impact is also given in the exhibit. You know, it says that smartware has become out of touch with its customers, and this is the main reason why the company is losing sales. So the impact of strategic risk is that we will lose in touch with our customers, and which in turn will lead to losing sales to competition. What needs to be done? The board needs to make radical changes, or the situation may get worse. They will need to come up with strategies to remain in touch with customers. They need to revisit their strategies so that it is not outdated, and the strategic direction needs to be fixed so that the objectives of the company can be achieved. Right? So do you understand? The whole purpose is that what I wanted to focus on was basically, you know, uh, talk about the importance of using these names in your answer. When you are asked to identify the key risks, you have to use these names if you want to score more. Okay. So please be familiar with this name, and then you can write whatever story you want linking with the case. You need to talk about the impact of the risk if it happens. You need to talk about the mitigation actions. But first, you need to say what risk is this. If you don't mention the name of the risk in a risk management questions, you will hardly get some marks. I mean, you will just get 3 out of 10. Okay. So in a risk management question, you need to be able to demonstrate to the examiner that you know various terminologies, you know the names of various risks. Any questions on this question before I move to the last question of our this thing? Okay, very good, very good. So the last, another question which we will do is basically March, June 2021 NCCP. This is the latest question, which probably the recent people will know. Question number 2A. And on the CB platform, this is past exam library paper, March, June 21. Question number 2A. So let me open, let me close this paper, go back, and March, June 21 resume. Question number 2A. It says prepare a briefing note, okay, which evaluates the executive board's approach to risk management and recommend how it could be improved. Evaluate the executive board's approach to risk management and recommend how it can be improved. That means that indirectly we need to find out the weaknesses of the current risk management process, the gaps in it, and then we will say we give recommendations to improve it. Now, if you see the word evaluate here in the question, it is not the professional skill. Okay, do not get confused. The professional skill here is communication skills in adopting an appropriate tone which is really understood by board members. Yeah. So the professional skill you need to demonstrate is communication skill. not evaluation skill. Okay, this word evaluate is just a general word here that you need to evaluate the executive board's approach. It's not that evaluation in which you need to talk about both pros and cons of the professional skills. Okay, the professional skill where you need to, which you need to demonstrate here is communication skill, not evaluation skill. So first of all, marks 12 plus 315 and divide by 4. So it's 4 4s are 16. So 4 points, right? So I need to talk about 4 weaknesses and 4 recommendations. 8 to 8 to 16. Perfect. Any question, guys, so far? You're okay? Let me open the exhibit. Again, it's stuck. 4 point. Yes, very good. Very good. Now the exhibit is the risk management. There's an exhibit called risk management. So we'll go to the risk management exhibit. Okay. I will also open the word processor, and I would prefer a tabular approach, table, 2 columns and several rows. I will say weaknesses and recommendations. I will select this, bold this, satirize this, and increase the fonts. Okay, template ready. I will just close it. So this is the risk management thing. From Tom Tucker, Operations Director, to Philip Allen, Chief Executive Officer. Executive Board's approach to risk management, 15th May. So this basically NCCP is a charitable organization. Okay, it's a non-profit or not-for-profit organization. It has got 2 board. It's a charity. It's got an executive board and it's got a board of trustees. So the executive board basically has 4 people: the CEO, the finance director, the HR director, and one more guy. They are the paid directors, right? That's why they are called executive directors. And they report to a board of trustees. That is a voluntary board, right? That is the actual board, the chairman and the non-executives. So they have a 2-tier board structure. The board of trustees, under them is the executive board. And also this country is suffering from financial economic crisis. Okay, so the situation is not good overall. The social and the economy situation is not good. That's the little bit of a background of this. Now, following our conversation about risk management, I have put together some notes about NCCP's risk management. Before we move on, let's open up the right page. Yeah, this one, it's so dirty. This is the topic, huh? Risk management process. If you want proper risk management, there has to be commitment from top management. Create a formal risk committee, and then these are the steps, including staff training, risk registers, likelihood, impact, right? Now let's see what they have done. The executive board has always been reluctant to get involved directly in risk management. Whoa! The board is saying that, the executive board, who are actually the paid board who are running the show, this guy is saying that the executive board has always been reluctant to get involved in risk management. Is that good or bad? What was the first and foremost condition here? That if you want proper, strong risk management, the first thing is strong commitment from the board. And this guy is saying what the board was reluctant to get involved. Why? Instead, operational staff are expected to deal with risk as they arise using their experience where appropriate. So the board is saying we are reluctant and we expect the staff to do their own risk management. Is that good or bad? That is crazy. And the question says evaluate the adequacy of the risk management. So I'm really pissed off. If I'm the auditor, I would have blasted them, because the first thing is they are not serious. So I would just first copy all this information here. The executive board has always been reluctant to get involved directly in risk management. Instead, operational staff are expected to deal with risk. What's wrong with this? What's the impact? Always remember, we have to talk about the impact. This is just the copy pasting. What's if the board is not, if they are reluctant, if they are not showing commitment, what happens? Does it make sense? I'm saying that this shows that the executive board is not fully committed to risk management, and if top management is not committed, then the entire risk management process will not be effective and will not be followed seriously by the employees. Does it make sense to you, CFOs? Very basic stuff, right? Now, what do you recommend? You think this is good? Huh? This can be a, we will say that, recommend that the executive board really needs to be committed towards risk management. They should form a formal risk committee if required, so that proper time and focus can be given to risk management steps. That's it. Nice, huh? Okay, I'll close this. However, in 2024, the Board of Trustees formally instructed us to prepare a risk register for NCCP. So the trustees, they formally instructed idiots, make a risk register. This was the first time we had undertaking such an exercise. In response, we arranged a all-day meeting which generated a list of all the potential risks that we faced. So they arranged a one-day, full-day meeting. All relevant categories like strategic, operational, financial, and legal were considered. Where appropriate, key operational members of staff were consulted. Okay. So at least now what they did was they did this step. They made a list of risks with and which NCCP face, right? And they also took input wherever necessary from the operational team members, which is good. Now, this activity generated a list of over 150 risks. So how many risks they face? 150. They came up with a list of 150 risks, various types of risks, strategic risks, operational, financial, legal, technical, whatever. Risks were then allocated to different board members or board directors. Okay, not bad. So they allocated the 150 risks to how many board directors are there? 4. So they allocated like the risks to 150 risks between the 4 directors. Can anybody calculate just out of curiosity? 150 divided by 4, roughly around 37, 38 risks per person. Okay, so they were the owners. In line with the trustees' instructions, all these risks were then recorded in a risk register. Very good. So they identified the risks, they allocated the owners, and they recorded everything in the risk register. Okay, nice. The board members were responsible for deciding an appropriate action and implementing them prior to the next board meeting scheduled 2 weeks later. What? Did you understand that? So they identified 150 risks and they divided those 150 risks between the 4 directors. Okay. And then they told them that, guys, listen, before the next board meeting, you need to come up with an action plan and implement it. And all this needs to be done within 2 weeks. So me, if I'm an auditor there, I would really have some serious doubts about, 150 risks to be implemented, actioned and implemented within 2 weeks. I have my doubts about the quality. Why? Because you see the time frame is too small, and B, I don't think they missed some very important steps. So they identified the risks and then they directly decided on actions, and then they implemented all of them in within 2 weeks. That's too good to be true. What did they miss? Look at these steps. Look at these steps and tell me, what did they miss? Did they make a list? Did they make a list? Yes, they made a list. But then the next step says analyze the impact and likelihood. No. Prioritize the risk like high risk, medium risk, low risk. No. Then they plan mitigation actions. Yes, that they did, but without prioritizing or doing anything. They prepared risk register. Yes. Okay. So I need to mention this, that they directly started working on the entire 150 list without actually identifying the impact, the likelihood, and then prioritizing. So I'm not going to draft now because of time limitations, but do you understand the approach? I will say that the directors, although they identified a comprehensive list of risks, but they did not assess the impact and likelihood of each of the risks. Without this assessment, it will not be possible to prioritize the risks, and hence identifying actions and implementing all the actions within 2 weeks seems unrealistic, or maybe or the quality of the actions may not be effective. What do you recommend? We recommend that for each risk, a proper assessment needs to be done regarding the impact and likelihood. A proper risk level should be like decided, whether high, low, medium, and then based on priority, the actions should be implemented. Okay. Now, what about this regular monitoring? I don't know. Let's read. A brief extract of the risk register is as follows. So this is the risk register. I just gave you an extract. So there's a risk. For example, the risk is loss of council funding. Details: council funding could be lost if NCCP does not meet relevant criteria. What's missing? What do you think? Something is missing. After details, I would like to see the impact if this happens. What happens? What will happen if the council funding is lost? What's the impact? There has to be a column of impact, and then there has to be a column of likelihood or probability, that what are the chances of this risk happening, high, medium, low. And then there should be a column of priority, like high, medium, low, overall assessment whether this risk is a high risk, medium risk, or a low risk for us. And then, right, I understand the board member responsible is a good operations director. Action required is there. Okay. And action implemented is there. Okay. So let me compare with my format. So the risk is there. Okay. Impact is not missing. Likelihood is missing. Priority is missing. Mitigation action is there. Owner is there. Next, review on. This is missing. That when is this risk supposed to be revisited? Every month, every quarter, once in a year? The frequency has to be mentioned in the register as well. So if it is a high risk, then generally it is recommended more frequent review of the risk. If it's a low risk, then maybe we can do an annual review. The complete risk register was then signed off by the executive team. Yeah, but the risk register is incomplete. At the trustees' request, the executive board has agreed to consider repeating this process at some point of time in future. Whoa. So now they have done this as a one-off exercise. It looks like the trustees, they instructed, and then these guys did a one-day meeting. They came up with a stupid list, and within 2 weeks, without doing proper risk assessment, they implemented everything, which I seriously doubt the quality of the intent and the quality of the actions. And they said that we will repeat this exercise sometime in future again. Very, very bad. It just shows that they are not interested. So regular monitoring. Why? Because risks are dynamic, dinosaur dynamic. Regular monitoring is not there. Did they give staff training? No. You just implemented stuff. So a proper staff training, policy, procedures, training needs to be there. Otherwise, it will not be effective. So overall, all you need to do is basically look at this checklist. Okay, look at this checklist of risk management steps and process and compare that with what is happening in this company, and then you can identify the missing gaps, bring one paragraph from the case study, add one paragraph as an impact of, if you're saying it's a weakness, why you are saying it's a weakness, what can go wrong if this is not fixed, and then you can come up with a recommendation explaining a little bit what needs to be done to fix the problem. So please just give 4 weaknesses, but focus on quality rather than quantity. Give 4 weaknesses, but give it very nicely. The format should look spick and span, sexy, like you see, it's very nice. Weakness, recommendation. The second weakness will be another row, another. So that's how you need to go along. Any questions? Oh my God, this chat box is completely filled. Can you create this table in a report or a briefing paper? Absolutely, yes. You can create a table in a report or a briefing paper. There is no restriction, okay? Who is stopping you? The board? Always, I said, always think like a CFO and that you're writing to a board. So if you want to insert a table in any one of your reports, that's fine. Sayyida Nakvi, sir, you asked to do BCO as a struggle in principal. Again, I'm principal agent relationship. Oh God. Okay, I'll answer that in 2 minutes. Should we draw the risk register with modification? And Maria, does the question asks you to redraw the risk register? Please don't volunteer yourself into such fancy imaginative things because you will screw up your time management. Strictly stick to the question. You remember the first day one when I was sharing examiner's comment, the examiner says that students don't read the requirement properly. So it's probably he was talking about students like you who were trying to give extra. No need, no need. Please stick to the requirements. All right, so there's one question by Sayyida Nakwi regarding agent principal relationship. It's very simple. Let me wait. Okay. So there is an agent. No, let's start with the principal. Principal and an agent. Okay. So in a normal commercial organization or a listed company, let's say a listed company or in a company, who's the owner? Shareholders. But are they running the company? No. In a listed company, the shareholders are so many general public. They don't run the company. So who runs the company? They appoint board of directors. to run the company on their behalf. So the board, they report to shareholders, and the board, they run the organization on behalf of the shareholders. So board is accountable, the board is responsible, the board is representing the shareholders, and hence the board is basically the agent of the principal who was the shareholder. Is this concept clear? Very good. Now another scenario, if it's a government organization. Now it gets a little bit tricky. So in a government organization, there is no shares, right? It's not a company. So generally, philosophically speaking, a government entity is owned by the public or the citizens of that country. You can sometimes say the taxpayers, whatever you think. But are they running the government organization? No. They basically appoint or select or appoint a minister, a government minister. The ministry or minister in terms appoint a board of trustees to run a particular organization, and the board of trustees appoint an executive board to run the organization. That's a typical government structure. There will be a minister, so that there will be a board which will be reporting to the board of trustees, and the board of trustees reports to the minister, and the minister is answerable to the public. Okay, so who's the principal here? This is principal. These are the principal. Minister is the agent. The board of trustees is the sub-agent. The board of directors are, so there are sub-agents also, right? There's a principal, there's an agent, there are sub-agents. That's it. In a charitable organization, who owns a charitable organization? Maybe the sponsor, like who sponsor is the person who created that organization, maybe the donors who are funding the organization on a regular basis. So the sponsors or donors are the principal of a charitable organization. Are they running? The sponsor or donors are running? No. They appoint a board of trustee to manage the charity organization. The board of trustees are non-executive, so they appoint a proper executive board of directors. So again, a very same concept. These are the principals. This is the board of trustees is the agent of this, and the board of directors are the sub-agents. Okay, guys, is this clear? Let me look at more questions. Sayed, are you happy now? Again, this is messing up. All right, guys. So I think today was a great session. Because I'm very happy that we were able to cover the risk management thoroughly. Okay, that is an area which a lot of students were struggling. Diamond model, please stay away from diamond model. Just Pastel and Porter 5 forces is enough. RS Web, I'm really disappointed by your question. I spent 3 hours explaining risk, impact, likelihood, probability, mitigation, owner, and you are saying how can we use them? It's not your fault, it's my fault. I'm so disappointed. Wait, is the session ending now? So who's gonna there are like topics which was who's gonna do this internal controls and all this? You want to do it now or you want to do it tomorrow? Tell me. You want to do this now or tomorrow? Okay, I can understand. Yeah, today was a tough session. So okay, tomorrow we will start with this remaining topics because I feel they are small but important. And then we will continue with tomorrow's agenda, right? But please, risk management, again, I repeat, is a topic which is tested in each and every attempt, just like financial questions. So if you master risk management question and a financial question, at least 30-40% of the paper is done. Okay, that is why I invested one full day on finance yesterday and one full day on risk management today. Guys, thank you so much, and I will see you all tomorrow. Till then, you guys take care and good night.